Welcome back to Bloomberg Markets. I'm John Ehrlichman. There is an astonishingly long list of global companies that have pulled out of Russia in the wake of the Ukraine invasion. Dozens and dozens of firms in energy, banking, retail, and beyond. And that includes a growing list of Canadian players. Just today, Alimentation Couche-Tard, Maple Leaf Foods CEO tweeted about it over the weekend. They joined Bombardier, Magna, Canada Goose, and Kinross Gold, among others. For more on the boardroom conversations taking place across the country, we're joined by governance expert Richard Leblanc, professor of law and ethics at York University. Richard, nice to see you as always. What's been your reaction to the speed and scale of these announcements?
Well, this has essentially happened in a week, and that for a board of directors is a microsecond. So what I'm hearing in boards is having tough discussions about reputation, brand, employee safety, the assertiveness of the Canadian government, institutional investor pressure, and it's becoming obvious that it's increasingly untenable for companies to remain in Russia. So these tough conversations are now front and center for many Canadian and North American companies.
I spoke to the former finance minister, John Manley, earlier today, who's served on boards for a long time in this country. And he said, basically, it's impossible to stand on both sides. And it's basically as short as that. I mean, is that the same kind of thing you're hearing from the boardrooms across this country?
Yeah, they're talking about, not having a foot in, but being all out. And that means divesting of shares, divesting of employees, and not threading the needle. Like we're gonna idle, we're gonna wait it out. It needs to be all out. And that means a significant write-down for many North American firms, estimated at $110 billion. So boardrooms are starting to have discussions about, we can't get our investment back. We have to look at T equals 0 from this point forward. And I'm also starting to see decoupling management incentive pay from the decision. So you neutralize the management team. You don't want management digging in because their incentive pay is adversely affected by an exogenous event like this. So I think boardrooms are increasingly coming to the realization that it's very risky to have 1 foot in and 1 foot out. You need to have 2 feet out.
But to your point about the financial cost short term of this, I mean, I already mentioned today some of the hardest hit companies in trading across North America seem to be the businesses that have been at the center of this story, because really figuring out, what the value of these assets are, if you're stepping out right now, is a question I guess we're going to find out with time. Now, I guess for companies that have not made a decision, or are monitoring the situation and do have ties, maybe they're direct, maybe they're indirect, what do you think the conversation is going to be like going forward?
Well, for those types of companies, the conversation is expropriation of assets and possibility of having stranded assets, and possibility of getting, 5 or 10 cents on the dollar. Russia has said that if you stay, we advise that you sell your equity investment to Russian partners. So there's the possibility that you're going to have expropriated assets by Russia. There's also the possibility that the Canadian government, and in particular Krista Freeland, who is Ukrainian, and it was instrumental in advocating for SWIFT and for removing favored nation and for instituting war crimes against the Russian government. There is an expectation that Canada could tighten sanctions further if you're on the fence, and could begin to point at Canadian companies and Canadian individuals as part of the next round of sanctions. So my advice to boards that are threading the needle is that there's a significant risk when you're doing that, if you're trying to have 1 foot in and 1 foot out at the same time.
Well, and, as much as there will probably be some conversations between Ottawa and some of these businesses when they're trying to figure out the ramifications or the road ahead, the reality is that we have seen many, many businesses around the world, certainly in the U.S., certainly in Europe, in Asia as well, that have also been simultaneously taking action. So for Canadian companies to be not taking action, I suppose, when similar businesses in their sectors in other countries, sometimes much larger than those Canadian businesses, I guess that would have been a hard dynamic for the boardrooms to ignore as well.
Yeah, and it's not just boardrooms, John. Like the big four announced over the weekend, they're all moving out of Russia. Norton Rose announced this morning, a law firm, that it is having both feet out. There are some law firms that are threading the needle, and what's going to happen there is employees and other stakeholders are going to be very critical of these firms that are trying to have it both ways. So, but when you look at the intelligence, I mean, the intelligence was known in late November, early December, when Putin was aligning troops along the border, and the Ukrainian directors that I talked to are just amazed that this amount of investment would have occurred by North American companies in Russia, because they have eyes wide open. It wasn't a question of whether they're going to invade; it's a question of when. So the bigger question is, having $110 billion of investment in Russia over the last number of years, and was that necessarily a wise geopolitical decision?
Yeah, and as you're speaking, I'm thinking about some of the moves have been half steps. There's a certain amount of hedging. Quite frankly, there's a certain amount of logistical challenge even to be servicing Russia right now. So the easier thing to say, if you're a big retailer, for example, is like, we are literally pausing our operations because there's not a lot of other options right now. But once you've sort of taken that step, how complicated do you think it will be to get back up and running? I mean, I guess that's as easy a question to answer as, how long are things going to play out in Ukraine?
Well, that's the other question, is that there's an incredible uncertainty. I mean, this could end with Mr. Putin having something happen like Gaddafi or Saddam Hussein. I mean, that's where this is ending. So the notion that we're going to wait this out and then have our second foot in is increasingly problematic. So it's really important for boards to get actionable intelligence on geopolitical risk, and that's not normally done that well by boards. Normally, what boards do is they assign a prime minister or a former premier or prime minister, and that person is deemed to be knowledgeable of geopolitical risk. But I observe board meetings. I've interviewed these types of people. That's not necessarily the case. You need to have eyes wide open, and you need to have actionable intelligence. And that includes here and now as well. And have these tough conversations with the management team that if we want to have one foot in and one foot out, what are the risks in doing that to our reputation, our brand, boycotts, employee morale, employee safety? Those are the tough discussions that good boards are having now.